All right, so we're diving into MTAR technologies today.
Sounds good.
And I know you're probably ready to hear all about what they've been up to.
Yeah, they've been making some moves lately.
They have. Basically, for anyone just joining us, MTAR is an Indian company
Okay.
that builds some really, really complex high-tech components.
Complex how?
Like, think about rocket parts, pieces for nuclear reactors, that
Right.
kind of thing.
So really cutting edge engineering.
Yeah, with a global reach, too.
What I think is fascinating about MTR is that they're not just in like a small niche market.
Right.
They're really well positioned in these sectors that are like set to grow a lot.
Exactly. And their latest quarterly results, which are what we're looking at today,
Okay.
really show that.
What do we have in front of us to look at?
So we've got their investor press release, the transcript from their earnings call, and their investor presentation.
Gotcha.
And let me tell you, these Q3 FY25 results are really something.
Really?
Not just a good quarter, but like a potential turning point.
Okay. I'm intrigued.
So to start, their year-on-year revenue increase was a huge 47.4%.
Whoa, almost 50%.
Yeah, in just a year.
That shows how fast they're growing.
And it's not even just revenue, their EBITDA, profit before tax, profit after tax. It's all up significantly.
How much?
We're talking 39.4%, 66.3%, and then 52.8% increases.
Wow, those are big jumps.
And it's not just luck.
Right.
Their order book is packed.
What does their order book look like?
Well, they've gotten over Rs 400 crore in new orders just in clean energy and aerospace.
On top of what they already had.
Yeah, which was already Rs 130 crore.
So they're not just filling old orders, they're setting themselves up for more growth.
Exactly.
Right.
And these new orders, especially the aerospace ones, are interesting.
How so?
Well, it seems like they're going to be doing more volume production for big multinational clients.
Oh, so it's a sign that, like, globally, people trust MTR's abilities.
Yeah, exactly.
It's not just about doing the orders, though, right?
That's
It's about,
true.
like, really becoming a big part of these high-tech supply chains.
Yeah, they're becoming a partner that companies really want.
That makes sense.
And they're not even content to just stick with what they know.
Really?
MTR is branching out.
Into what?
Like, they're getting into battery storage systems. They're partnering with Fluence Energy for that.
Okay.
And they're even trying out the oil and gas sector.
This is all pretty interesting diversification,
It is.
especially the battery storage part,
Yeah.
because, you know, that's crucial for renewable energy.
Huge for the transition.
And oil and gas,
Yeah.
that might seem surprising
Yeah.
with everyone moving towards renewables.
Right.
But it's still a huge industry
It is.
with a lot of demand.
So it's kind of a hedge for them,
Exactly.
not putting all their eggs in one basket.
Exactly. By diversifying, they're getting into new areas where they can make money
Right.
and protecting themselves.
Right.
If one sector doesn't do well,
Makes sense.
it shows they're thinking long term.
Okay, so we've got good financial performance, a really healthy order book, and this proactive expansion.
Yeah, that's a lot.
But there's one more thing that people are talking about.
What's that?
The potential for big contracts in nuclear.
Oh, yeah, the nuclear opportunity.
Right. There's a lot of anticipation around these potential orders.
For what?
For India's Kaga 5 and 6 nuclear reactors.
Oh, wow.
And then 5 refurbishment projects.
Okay.
And these aren't small orders.
No.
We could be looking at Rs 1,000 crore coming in over the next 6 months.
That's huge.
It would be huge, not just for MTAR, but for India's nuclear goals in general.
I can see why people are excited about that.
Yeah.
But these big infrastructure projects,
Yeah.
they can be complicated.
Right.
And there can be delays.
True. Good point.
So, you know, investors should be cautiously optimistic.
Right. But even with those hurdles, MTR is aiming high. And they're projecting a steady rise in their margins to 28% by FY28.
That's a good margin.
It is.
And that shows they're not just focused on growing,
Yeah.
but on growing and making a profit.
Exactly.
How are they planning on doing that?
Well, they're going to be shifting towards higher margin products,
Like what?
especially in aerospace and nuclear.
Okay.
And they're becoming more efficient
Makes sense.
and doing some strategic cost management.
So to sum it up,
Yeah.
we've got a company that's growing really fast, fueled by big new orders, and this smart move into promising markets.
Right.
They're in a good place financially,
They are.
focused on improving their margins.
Yeah.
And they might end up being super important for India's nuclear energy plans.
It's a pretty compelling story.
It is, but like with any investment,
Yeah.
you have to look past the hype
Right.
and really understand the opportunities, but also the challenges.
Absolutely. So what are your initial thoughts?
Well, what I find really interesting is how MTR is positioning themselves,
Okay.
right? Where all these big technological trends are happening.
Yeah.
They're not just going with the flow. They're shaping the future.
It makes you wonder what else they'll get into.
Exactly. That's why this deep dive is so interesting.
All right, so let's keep digging into this.
Yeah, let's do it.
Their earnings call transcript should give us a better look at their plans.
Okay.
They started off with Mr. Srinivas Reddy, their managing director, highlighting how well they did this quarter.
Like the specifics.
Yeah, so 47.4% year-on-year revenue growth,
Right.
sequential improvement in margins, and all those big new orders.
He was emphasizing that this isn't just luck, right?
Yeah, he said this growth is because of their planning and their strong order book.
So it's not a fluke, it's part of their strategy.
Right, and speaking of strategic moves,
Yeah.
remember their partnership with Fluence Energy in battery storage?
Yeah.
They've already started working together.
Wow, that was fast.
It was. They got an initial order of Rs 2.7 crore.
Okay.
But get this, they expect that to explode once the prototype is done in June.
Explode how?
We're talking potential volumes of Rs 250 crore in FY27.
That's a huge jump.
It is.
Shows they can get into these new sectors and that there's global demand for this.
Yeah, now let's get into their order book.
Okay.
As of December 31st, 2024, here's how it breaks down by sector.
Okay.
Clean energy, which includes things like civil nuclear power, fuel cells, and hydro, takes the biggest chunk at 55.8%.
Okay.
Then space is at 18.1%, followed by defense at 13.1%, and products and others at 7% and 5.9%.
So it's a pretty diverse portfolio.
It is. It really helps spread out the risk.
It does.
And positions them for growth across a bunch of different areas.
But like we said before,
yeah,
that clean energy segment, particularly nuclear, is one to watch.
Definitely. And that brings us to a question everyone had on the earnings call.
What was that?
How much revenue they actually think they'll get from that potential Rs 1,000 crore from those Kaga 5 and 6 and the refurbishment project.
Oh, right, at FY26.
Everyone wanted to know how quickly it'd turn into money.
Yeah.
Mr. Reddy explained that they'd get some of that revenue in FY26. But most of it would actually come in FY27 and FY28.
Because of the timeline of the projects.
Exactly, they take time.
Makes sense.
But even with that delay, he projected 30% year-on-year revenue growth for the next 3 years. So from FY26 to FY28.
Wow. That's a pretty bold projection.
It is, especially given how complex the nuclear sector is.
Yeah, it is ambitious.
But if you consider their order book and how much momentum they have,
right,
it might not be impossible.
True, and they're also aiming for that 28% EBITDA margin.
By FY28, right?
Yeah.
So it's not just about more revenue, it's about profitability, too.
Exactly, being efficient as they grow.
Right, and speaking of expansion,
yeah,
remember their move into oil and gas?
Oh, yeah, they got that order for the first articles.
Right.
For an oil and gas project.
And they're setting up a whole facility just for this.
Wow.
And it should really ramp up by FY27.
They're expecting how much revenue?
Somewhere between 150 to 180 crore in that year alone.
That's a pretty aggressive expansion.
Yeah, it is, especially with everyone pushing for renewables.
What's driving this, do you think?
I'm not sure. They didn't say during the call.
Okay.
But I think it's probably a few things.
Like what?
Well, even though we're moving towards renewables,
yeah,
oil and gas is going to be a big part of the energy mix for a while.
That's true.
It's a huge market with constant demand.
Makes sense.
And MTAR being so good at this kind of precision engineering for complex projects,
yeah,
it probably translates well to oil and gas.
I see. So they can use what they already know.
Yeah.
And get into a market where it's hard to compete.
It's a smart diversification strategy.
It is, but also a risk.
Definitely. And speaking of risks,
yeah,
they're also looking to expand what they do with Bloom Energy in the fuel cell sector.
Oh, right. The hot boxes.
Yeah.
They supply those.
They do, and they're pretty important for how the fuel cells work.
How so?
Well, they keep the fuel cells at the right temperature.
Oh, okay. For efficiency.
Exactly. And now MTR wants to increase their wallet share.
What did that mean?
It's what Mr. Reddy called it.
Yeah.
Basically, they want to do more for Bloom.
Provide more value, get more business.
Yeah.
So they're going from just a component supplier
Right.
to a more important part of Bloom's supply chain.
Exactly.
That's smart.
It is. It'll probably make them more money and strengthen their relationship with Bloom.
Makes sense.
And we're already seeing them benefit from how they're improving their operating leverage.
Oh, yeah.
Yeah, their Q3 results showed their margins getting better.
Because of the leverage.
Yeah, and because they're starting to do volume production for a few of their multinational clients.
So they're becoming more efficient.
Exactly. And they even said their employee benefit expenses,
Okay.
which have been high because they've been investing in people,
Yeah, makes sense.
they'll start to go down as revenue goes up.
Oh, okay, so their margins could get even better.
Right. They're playing the long game.
They are investing in their people now to get the benefits later.
It's a good strategy in a competitive market.
It is.
Now, let's switch gears and talk about aerospace.
Okay.
That's an area where MTR has been doing really well.
What have they been up to?
Mr. Reddy mentioned they're already in volume production with some aerospace customers.
Okay.
And they're working on first articles, like prototypes, with others.
That's good progress.
It is. And if you remember from their investor presentation,
Yeah.
they've added a bunch of new customers.
A lot in aerospace.
Yeah, they've been really trying to break into this market.
And they're not just talking.
No.
They're actually doing it.
Yeah, they've been building a brand new aerospace facility in Hyderabad.
Oh, wow. When will that be ready?
By the end of this month, it's a big investment.
It shows they're serious about this sector.
Right. They're not just talking, they're putting their money where their mouth is.
So what kind of revenue are they expecting?
Well, they think they'll get about 125 crores from multinational aerospace companies alone in FY26.
That's a big increase.
It is, and they expect even bigger numbers in FY27.
Once those projects are at full production.
Exactly. They're really going all in on aerospace.
They are?
They even highlighted this 15-year agreement they signed with Israeli aerospace industries.
Wow, 15 years.
Yeah, for first articles and batch production,
Okay.
which should bring in over ours 150 crore.
That's great.
And they talked about their work with GKN Aerospace, where they're already doing volume production.
And expecting how much from that?
About $10 million.
Wow, these are big wins for them.
They are. Having these long-term agreements like that is great for a growing company.
It gives them some stability.
Yeah, and predictability.
And it shows they can compete globally.
Right, and that they can partner with these big companies.
Exactly. But even with all this good stuff happening,
Yeah.
we can't forget that growing this fast, especially into new and complex areas,
Right.
can be challenging.
It can, and the analysts on the call definitely brought that up.
What kind of challenges did they point out?
Well, one analyst mentioned that MTAR's working capital days, which basically shows how well they manage their short-term assets and liabilities.
You have been kind of up and down.
They have, at one point, they hit 250 days.
That's higher than they wanted, right?
Yeah, their target was around 200.
And that can worry investors.
Yeah.
Too much fluctuation isn't good.
Right. But MTAR did say that as of December 2024, their working capital days were down to 222.
Closer to their target.
Yeah. And they said the earlier jump was because of the kind of projects they do.
Okay.
And the credit terms with some clients.
Like who?
Especially Bloom Energy.
So complicated projects take a while.
Right.
And they can tie up their money.
Exactly.
And the agreements with big clients can also make a difference.
Yeah, but are they doing anything about it?
That's the important question.
They are. They said they're trying to optimize their working capital.
To what?
To bring it down to 175 days in the long run.
And when do they think they'll do that?
Probably after FY27.
So they're aware of the problem and working on it.
Yeah. They mentioned things like reducing inventory and increasing payable days.
Sounds like a plan.
It does. Investors will definitely be watching to see if they can actually do it.
Right.
Another concern was about how the rise of deep learning technology might affect Bloom Energy's data center business.
That's interesting. How so?
Well, deep learning, which is a kind of artificial intelligence, could mean we need fewer traditional data centers.
Oh, I see.
Which would then affect Bloom and then M2R.
Right, because Bloom is their client.
Exactly. So the analyst was basically asking, what if your biggest customer in fuel cells suddenly doesn't need as much?
Yeah, that's a valid question.
It is, especially with technology changing so fast.
So what did MTAR say?
Mr. Reddy didn't seem too worried about it.
Really?
Yeah, at least not for now.
Yeah.
He said he hasn't heard anything from Bloom to suggest they're slowing down or changing their plans. He even said Bloom hasn't been sharing much about future orders.
Why not?
Because they think demand is going to go way up in the next few quarters.
That's a big statement.
It is.
Are they just being optimistic, or do they really believe that?
Hard to say. Remember, this is coming from MTAR.
Right, not Bloom directly.
It's always good to be a little skeptical and do your own research.
Absolutely. But it does show that MTAR is confident in their partnership with Bloom.
Yeah, and that they believe in the fuel cell market.
We'll see how it all plays out.
We will, but the impact of these disruptive technologies like deep learning, it's something investors have to keep in mind.
Definitely.
All right, we've covered a lot here.
We have.
We've seen how well MTAR's doing financially, their big expansion plans, and some potential challenges.
But we've just scratched the surface.
Exactly. So let's move on to part 2.
Sounds good.
We'll really analyze their financial health.
Okay.
And see what their earnings call tells us about their strategy and what they see for the future.
All right, let's do it. Now that we've talked about MTAR's growth story,
Yeah.
let's look at something that's becoming more and more important for investors.
What's that?
Their approach to corporate governance and ESG factors.
You're right. A lot of investors really care about those things these days.
They do.
And it seems like MTAR is taking them seriously, too.
Their investor presentation actually talks about their commitment to ESG principles.
Okay.
Saying it's like built into their business decisions.
Right, but what are they actually doing? Actions speak louder than words, right?
Exactly. So what concrete steps have they taken?
Well, they've got some pretty interesting initiatives.
Like what?
For one, they've set up 2 solar rooftop plants.
Oh, cool.
Yeah, and they have a combined capacity of 1.38 megawatts.
That's a pretty big step towards using less conventional energy.
It is. It helps them reduce their carbon footprint.
It's a real commitment to renewable energy.
It is, and it's not just a one-time thing either.
What do you mean?
They're planning to install solar rooftops at their other facilities, too.
Oh, wow. So it's a long-term effort.
Exactly.
That's good to see.
They've also emphasized their policies for diversity, equity, and inclusion for all their stakeholders.
Okay, that's important.
And from a governance perspective, their board of directors is mostly independent.
What does that mean?
Well, most of the board members aren't directly involved in the day-to-day running of the company.
Oh, okay.
And the chairman of the board is also independent.
That's a good sign.
It is. It suggests strong corporate governance.
Right, because it provides some checks and balances on the management.
Exactly.
It can really improve transparency and make sure everyone's accountable.
Right, and investors like that.
They do.
And on top of all that, they got a good ESG rating from Dun & Bradstreet.
That's a reputable organization.
It is, and they scored particularly well in governance and environmental practices.
So they're not just talking about ESG, they're actually doing it.
They are. Now let's go back to the earnings call for a minute.
Okay.
Were there any discussions about risks or challenges that could affect MTAR?
Yeah, I'm curious about that.
There were definitely some concerns. One analyst brought up the fact that India recently repealed the Civil Liability for Nuclear Damage Act.
Okay.
This means foreign companies can now compete in India's nuclear power sector.
I see. And before it was more protected.
Exactly.
So that's a big change.
It is, and it could make things uncertain for companies already in that market.
I mean, more competition.
Right. So how did MTAR respond to that?
Good question.
Well, Mr. Reddy didn't seem too worried.
Really?
He acknowledged that foreign companies might enter the market, but he was confident in MTAR's strength.
What are their strengths?
He highlighted their track record, their strong relationships with important clients like NPCIL, and their proven ability to successfully complete complex projects.
So they believe they can compete, even with more competition.
Exactly. But they didn't really mention any specific strategies for staying ahead.
Interesting.
They did emphasize their commitment to continuous improvement, innovation, and maintaining those strong client relationships.
Basically being flexible and adapting to the changing market. That's a good foundation, but it will be interesting to see how this new competition plays out in the long term.
It will.
Now let's talk about something else.
Okay.
MTAR's investor relations and communication.
Okay.
Being transparent is really important for building trust with investors.
It is. How are they doing in that area?
Well, it seems like they're doing a pretty good job.
How so?
They regularly publish investor presentations, press releases, and detailed financial reports.
Okay.
They have earnings calls like this one to provide more information about their performance and strategy.
They're not hiding anything.
Exactly. They're being open about sharing information.
Which is a good sign.
It is. Having open communication and easy access to information shows that a company values its investors.
Right, and it seems like investors are responding well.
How so?
Their stock price has been doing well.
Which usually means the market believes in their potential for growth.
Exactly, but of course, past performance doesn't guarantee future results.
Of course not. It's just one piece of the puzzle.
Right.
But overall, it seems like MTAR is communicating well with investors.
Yeah.
And giving them the information they need.
Makes sense.
Now, let's move away from just numbers for a bit.
Okay.
And talk about the less tangible aspects of their business.
Right.
What's their management team like?
They seem to have a very experienced and capable leadership team.
That's good to hear.
Yeah, Mr. Reddy, the managing director, has over 30 years of experience in manufacturing and construction.
Wow, that's a lot of experience.
It is, and he's a very hands-on leader.
What do you mean?
He's deeply involved in the company's operations.
That kind of experience is really valuable, especially for a company like MTR.
It is. They're dealing with some pretty complex sectors.
What about the rest of the management team?
They have a good mix of people who've been in the industry for a long time and some younger professionals.
That's a good balance.
Yeah, their CFO, Mr. Rao, has over 20 years of experience in finance.
So they have someone who really knows finance.
Exactly. He's been crucial in managing their money during this period of rapid growth.
A strong finance team is essential when a company is growing so quickly.
It is, but they didn't really talk about their company culture during the call.
That's interesting.
You can kind of get a sense of it from their actions and what they say, though.
How so?
They seem to really value teamwork, innovation, and focusing on their customers.
Okay.
And they seem really proud of their work and their role in India's strategic sectors.
Those are all good qualities.
They are.
A strong culture can really set a company apart.
Absolutely.
It can help keep employees engaged, attract top talent, and create a shared sense of purpose.
Now let's talk about their manufacturing capabilities.
Okay.
What makes them stand out in that area?
Well, their investor presentation highlights their 9 manufacturing units.
Wow, 9.
Yeah, all strategically located in Hyderabad.
Okay,
And one of them is specifically for exports.
that makes sense.
They also emphasize their state-of-the-art equipment and really strict quality control processes.
So they've really invested in building a top-notch manufacturing infrastructure.
They have a long history of taking on complex projects.
Yeah, which has given them a lot of experience.
Exactly, and they've learned how to meet really demanding specifications.
And that's so important in their line of work.
It is,
Precision and reliability are non-negotiable.
especially when you're dealing with aerospace or nuclear components.
Right.
And the fact that they have these long-term relationships with major Indian organizations and global companies,
Yeah,
that says a lot about their quality and their ability to deliver.
it really does. It shows they're credible and can build trust.
Exactly. And those relationships provide a solid base for growth and open doors to new opportunities.
They've also been proactive in getting certifications and accreditations to prove they meet international standards.
That's essential for competing globally.
It is.
Now let's move on to their research and development efforts.
Okay.
Are they investing in innovation?
Their investor presentation mentions that they're focused on developing new products and technologies
Okay.
to keep up with what their clients need.
Makes sense.
They also highlight their in-house design and engineering teams.
So they have a lot of control over the process.
They do.
Sounds like they have a strong R&D culture.
They do. Did they mention any specific projects during the call?
I'm curious about that.
Yeah, they mentioned a few new product development projects.
Like what?
They're working on first articles for Weatherford in the oil and gas sector,
Okay.
prototype units for Fluence Energy's battery storage systems,
All right.
and even valves for naval programs.
So they're really exploring new things and expanding what they can do.
They are.
But are these projects aligned with their overall business goals?
Oh, yeah, definitely.
So it's not just innovation for the sake of innovation,
Right, they're focused on developing things that the market actually needs.
and that have clear potential to make money.
Exactly.
Okay, now let's talk about their competition.
All right.
Who are they up against?
Well, it's a bit complicated because they're in so many different sectors.
Right.
But their investor presentation does mention a few key competitors in certain areas.
Let's start with clean energy.
Okay.
Who are their main competitors there?
In that sector, they're competing with companies like Larsen and Toubro, Godrej and Boyce, and Walshnagar Industries.
Those are some big names in India.
They are all well-established with a lot of experience in heavy engineering and manufacturing.
So how does MTR differentiate themselves?
They focus on being specialists in critical and differentiated engineered products.
Meaning?
They're not trying to do everything.
Right.
They're focusing on areas where they really excel.
That's a smart strategy.
It is. It helps them carve out their own niche.
Did they mention anything else that sets them apart?
Yeah, they also talked about their ability to work with exotic materials,
Okay.
which are often needed for high-tech applications,
Right.
and their commitment to meeting very strict quality standards.
So they're not cutting corners.
Exactly. And that builds trust with their clients.
It does. It's a classic David versus Goliath story.
It is. They're a smaller company.
But they're competing by focusing on what they do best and offering something unique.
Now let's look at their overall growth strategy.
All right.
What's their plan for the future?
Their investor presentation outlines some pretty ambitious plans.
Like what?
They want to expand their product portfolio, strengthen their relationships with existing clients,
Okay.
tap into new markets, and continuously improve their manufacturing capabilities.
It's a multi-pronged approach, hitting all the key areas for growth.
It is. Let's break it down.
Okay, so starting with expanding their product portfolio,
Yeah.
what are they planning?
Well, they're actively developing new products and technologies in-house,
Right? We talked about that.
but they're also looking into acquiring other companies.
Acquisitions, huh?
Yeah, companies that could add to what they offer and help them reach new markets.
Acquisitions can be a fast way to grow
They can.
and get access to new technologies.
Right. But they can also be risky if they're not done right.
MTR seems to be approaching them strategically, though.
What do you mean?
They're looking for companies that align with their core strengths and long-term goals.
So they're not just buying any company that comes along.
Exactly.
Now, what about those existing client relationships? How are they planning to make them even stronger?
It's all about providing great customer service, going above and beyond, and building long-term partnerships.
So they're not just focused on individual transactions.
No, it's about building relationships.
That's a good way to keep clients coming back.
It is, and it's usually cheaper to grow with your existing clients than to constantly find new ones.
Makes sense.
Plus, it makes your revenue stream more stable and predictable.
Good point.
Now, for entering new markets,
Yeah, where are they looking?
they're exploring possibilities in high-growth areas like the Middle East, Southeast Asia, and Europe.
Ambitious.
And they're targeting specific sectors within those markets:
Like what?
aerospace, defense, and oil and gas.
So they're being very strategic about where they expand.
Exactly. They're focusing on areas with the most potential, where their expertise is in high demand.
Smart move.
It is.
And how are they approaching these new markets? Are they doing it all themselves or finding partners?
Well, they're using their existing relationships with those global companies
Okay,
as a way to enter these new regions.
that makes sense.
It helps reduce the risks and costs of expanding internationally.
That's a good way to use their existing network.
Exactly. They're also looking into partnerships and joint ventures with local companies in those areas.
To get some local expertise and connections.
Exactly. It's a balanced approach, combining their own strengths with local knowledge.
That's a good strategy.
Now let's talk about how they're improving their manufacturing capabilities.
Okay.
What are they doing to stay ahead?
Well, they're investing in new equipment, making their facilities bigger, and using advanced manufacturing methods,
Makes sense.
all to boost their capacity, efficiency, and flexibility.
Right. They're not letting their infrastructure hold them back.
It sounds like they're really committed to using the latest manufacturing technology.
They are. What specific technologies are they focusing on?
They're really into automation and digitization to streamline their operations and cut costs.
So they're embracing technology to improve.
They are.
Okay, so what about their financial outlook? What are they projecting for revenue and profitability?
They're projecting a strong 30% year-on-year revenue growth for the next 3 years.
Wow, so from FY26 to FY28.
Exactly.
That's ambitious.
It is, and they're aiming for an EBITDA margin of 28% by FY28.
That's a significant increase from where they are now.
It is.
What's driving all this projected growth?
Well, they're expecting strong demand in clean energy,
Especially nuclear.
yes, and continued growth in aerospace and defense,
Oh.
successful expansion into new markets, and their ongoing efforts to be more efficient.
Sounds like they're doing everything right.
It's a good story, but of course there are always risks.
What kind of risks are we talking about?
Well, there are always things outside a company's control that can affect them.
Right.
Some of the main risks for MTR include delays in those big projects.
Especially in nuclear.
Yes, and increased competition from other companies, both in India and internationally,
Okay.
possible fluctuations in raw material prices, and unexpected changes in government policies or regulations.
Those are all valid concerns.
They are.
How are they trying to manage these risks?
Well, they're diversifying their revenue streams.
So not relying on just one sector.
Exactly. They're spreading the risk across different sectors and markets.
Okay.
They're also strengthening their relationships with key clients and suppliers,
Makes sense.
hedging against currency fluctuations, and staying informed about any potential changes in regulations.
So they're being proactive.
They are, which is good for investors to see.
It is.
Now, let's zoom out a bit and think about the bigger picture.
Okay.
What does MTAR's success tell us about the Indian manufacturing sector as a whole?
That's a good question.
Their story really shows how much Indian manufacturing is growing and becoming more competitive.
Okay.
They're a prime example of an Indian company competing and winning on a global scale,
Right.
providing high-quality products and services to clients all over the world.
It's a sign that India is moving beyond just being a place for low-cost manufacturing.
Exactly.
They're becoming known for providing high-tech and specialized engineering solutions.
And their focus on making things in India and reducing imports is further proof of that shift.
Right. They're helping India rely less on foreign suppliers for important components.
Which is really important for the country's economic and technological development.
It is.
Their success is a good sign for the future of Indian manufacturing.
It is.
It suggests that with the right investments, policies, and entrepreneurial spirit, India can become a global leader in advanced manufacturing.
It's an exciting time for the Indian manufacturing sector.
It is, and MTAR is leading the way.
Now, let's think like an investor.
Okay.
Why should someone consider investing in MTR?
There are several reasons. First, they're in sectors that are expected to grow a lot in the coming years.
Like clean energy, aerospace, and defense.
Exactly. These sectors are going to see a lot of growth because of things like climate change, technological advancements, and geopolitical shifts.
MTAR is well-positioned to benefit from that growth.
They are. They have a strong order book, a history of delivering, and a solid financial foundation.
What else makes them attractive to investors?
They're committed to innovation, always expanding their products and reaching new markets.
Okay.
They have a capable leadership team, a strong manufacturing infrastructure, and they're really focused on their customers.
Sounds good.
But what about their valuation?
Right. Are they priced fairly?
Their current valuation reflects their potential for growth and their strong performance.
Okay.
But like with any investment, it's important to do your research carefully.
Right. And weigh the potential risks and rewards.
Exactly. No investment is a sure thing.
Definitely not.
Investors need to really understand the company's financials, their competition, their growth strategy, and their management team.
Before investing any money.
Exactly.
And it's always smart to think about your own investment goals, how much risk you're comfortable with, and how long you plan to invest.
Good point.
Okay, so as we wrap up this deep dive into MTAR technologies,
Yeah.
what are the key takeaways for our listeners?
Well, MTAR is a dynamic and ambitious company with a lot of potential.
Okay.
They're leaders in several high-growth industries. They're financially sound, have a strong leadership team, and are dedicated to innovation and customer satisfaction.
They're also contributing to India's economic and technological growth,
They are?
promoting self-reliance, and helping the country become a global manufacturing force.
Their story is a great example of how innovation, strategic execution, and a global mindset can lead to success.
They're definitely a company to watch.
They are, but like with any investment, it's important to do your research, understand the risks, and make informed decisions. Now, before we go to part 3, where we'll connect all of this back to you and your individual interests,
Right.
I have a question for you, the listener.
All right, let's hear it.
Given everything we've discussed about MTAR's strengths, their ambitions, and the sectors they operate in,
Yeah,
what stands out to you the most? What makes you curious?
that's a great question to think about.
It is.
And we'll explore those individual takeaways in part 3.
We will?
But for now, keep that question in mind.
Yeah.
What about MTAR's story resonates with you?
That's what we want you to think about.
So we've really dug deep into MTAR technologies.
We have their financials, their expansion, those new sectors, and even their ESG efforts.
We've looked at the good and the bad, their strengths and weaknesses.
But as we wrap up,
Yeah,
it's time to make this all about you.
the listener.
Right. Exactly, because in the end, this isn't just about learning stuff.
Right.
It's about how this can be relevant to you.
Exactly. Let's tailor this to you specifically.
Now, if you're an investor or even thinking about investing,
Mhm.
this deep dive is giving you a lot to think about.
We went beyond just the headlines
You did.
to understand what MTAR could be as an investment.
You've seen their financials,
Right.
but also heard about the challenges.
Like managing their working capital.
Exactly. As they grow so fast.
This gives you a more complete picture
It does, more than just reading the news.
so you can make smarter decisions.
And weigh the risks and rewards.
But even if you're not into investing,
Right.
MTAR's story is still interesting.
How so?
Well, for anyone interested in how the world is changing.
Okay, I see that.
For example, if you're into the future of clean energy,
Yeah.
MTAR's role in India's nuclear plans is a great example. How they do in this sector
Right.
could show us what's happening with nuclear energy globally,
That's like a preview.
of the challenges and opportunities of going green.
Makes sense.
And if you're interested in what India is doing in aerospace and defense, MTAR's partnerships with ISR, DRDO, and those big international companies show us a lot about that.
Yeah, they're important for India becoming more self-reliant.
Exactly, in those key industries.
Their journey shows how India is trying to become a leader in aerospace and defense globally.
Right, and for those interested in global supply chains,
Good.
MTAR expanding into oil and gas
Yeah.
while also working in aerospace and energy, it's a great example of diversification.
Whether you're a student or a professional,
Right.
their strategy teaches us about global trade and managing risk.
So what does this all mean for you?
It means you understand a company at the cutting edge of so many industries
You have knowledge now that you can use,
for your own decisions.
whether it's about investments or just understanding the world better.
Imagine talking to someone about MTAR technologies.
Right.
You can confidently say, well, I did a deep dive into their Q3 results, and what's interesting is
You're not just listening anymore
you're engaging.
and adding to the conversation.
That's what we want,
Here on the deep dive.
to give you knowledge and insights that you can use.
But before we go, we want to leave you with one last thing to think about.
Okay.
We talked about MTAR's goals in nuclear and aerospace, but there's something else happening in India.
What's that?
The private space industry is growing.
Oh, yeah, companies like Skyroot Aerospace and Pixel.
Exactly. They're doing amazing things in space exploration and technology.
It makes you wonder if MTAR could be a supplier for them, too.
With their expertise in precision engineering.
Yeah,
It's an interesting thought.
it is.
If MTAR got into this new market, it could help them grow even more.
And really cement their position as a leader.
It's something to watch, definitely.
As the Indian space industry keeps growing, MTAR could be right there with them.
Contributing to this exciting new chapter,
So that's it for today.
our deep dive into MTAR technologies,
We've given you the facts and figures,
but also a way to understand their journey and their potential,
and hopefully we've made you curious
to learn more,
to ask questions,
and to explore all the possibilities out there.
because that's what makes learning so exciting.
So keep exploring, keep questioning, and keep diving deep.
We'll see you next time.